Welcome back to CEO Money. I'm Michael Yorba with my co-host Mervyn Price.
Hello there.
And Andrew Kernan.
Hello. Thanks, Michael.
You're welcome. All right. Our guest this week is Kent Wilson, CEO, Alpine Ford Technologies. Kent, welcome to the show.
Thanks, gentlemen. How are you guys?
We're good. All right, Kent, let me back up a little bit. We've got two other co-hosts with us. Both of them are technically oriented, much more so than myself. So I'm going to let them come in. Andrew has been in the industry for quite a while. We'll get into his background too. But before we get started, I want you to bring yourself out to the audience. Give us a background on who you are, what you do, and then Alpine Ford Technologies, what it does, because it does more than just one thing.
Yeah, sure. My background, I've been an executive at several different companies over the last 25 years. Started off back in the 90s as a CEO of a company that dealt with software related to the insurance industry and subsequently to the automobile dealership industry. That was back in the 90s. I ended up selling out of that company in 2002. Became kind of accidentally a turnaround consultant to several private equity groups and did that for about 8 years, from 2002 to 2010, late 2009, and at that point had become took a job as CFO of a rather small petroleum company and helped grow them dramatically up, and did that for a few years. My wife and I in 2013 had the birth of our twins, and decided that it was time to maybe step down from that role for a while and spend some more family time, which was nice. So I ended up taking about a year off and was approached by several of the larger investors in what is now Alpine 4 to come on and lead them through going public and really kind of fine-tune a small automotive technology company. And that's where I'm at today. I've been the CEO of this company for now a little over 3 years, and we're growing radically.
Give us an overview of Alpine 4, and then we'll start drilling down into the market strategy, market opportunity, things of that nature.
Sure. Alpine 4 is a fast-growing, uniquely positioned, technology-driven holding company. And the model that we put in place is to really go out and not only acquire other businesses, but try to see how we can synergistically innovate together. And to give an example, Autotech was the company that really became our subsidiary, Altia. And Altia is a subsidiary that is geared towards the automobile dealership industry. It has a connected car technology associated with it, and it allows dealerships to know where their inventory is at on the lot or off the lot, if the fuel in the car is full, if the battery is full, and really integrates the lot inventory management of a dealership into the sales cycle and the dealership management cycle. That industry or that subsidiary operates in about a $9 billion market opportunity for us, and it's starting to grow pretty dramatically. We think we'll catch about 1 to 2% of that over the next 36 to 48 months. So to put that in perspective, we think very reasonably $90 million to $180 million is really readily available for that subsidiary. But getting back to the synergy side, we also acquired an electronics manufacturing company called Quality Circuit Assembly. They'd have been around since 1988. They manufacture electronic assemblies, not too different from Foxconn, but just a lot smaller in nature. They have several Fortune 1000 companies as their customer base, and they now manufacture our hardware product for Altia, which is designed for the automotive industry. So there's synergy between those two companies, and that's kind of how we like to approach things. What can we do between our subsidiaries to really enhance and promote and get them to work together and solve common problems? And so that's kind of the overview of Alpine 4.
Good. Andrew or Merv, do you have any questions?
No, I'm just very impressed. I'm looking at this, and this is Mervyn, and it seems to me you're very skilled in the aspect of mergers and acquisitions. I'm looking at your acquisition of Lattice Incorporated and the synergistic link it has with the other companies you have. Tell us about this merger and acquisition approach to the market that you have.
Yeah, so well, it goes pretty deep on this. So if you understand our business model, when we look to acquire a company, we really have two phases. One of them is an optimization phase, and that includes strategic planning, profit and expense planning, and then really synergistic planning. And so think of it as like two buckets. We buy a company, it goes into the optimization bucket. And that takes, on the short side, 120 days. The long side, it can take, a year and a half. You have to buy in-depth training, nurturing, capital resources, human capital resources, various different things to get that subsidiary on what we would consider a strategic plan that's suitable to Alpine 4. But in there, we really try to figure out where can we keyly synergistically innovate. So if you look at Lattice, which we just announced the LOI on that. Now, we haven't closed that deal, but we're in the process of getting that deal past due diligence and really into the acquisition phase. And that will probably happen, and I imagine it will happen before the end of the year. It could be, in October, November, but somewhere between in the fourth quarter, we'll have closed that deal. But that transaction, they're a tech play in the correctional services industry. They currently put correctional services, inmate-driven solutions to the prison system, and allows the inmates to be able to either communicate with loved ones. They have a video conferencing booth that allows them to do video conferencing. So if you're, say a family member and you want to communicate with the inmate, it allows you to have real-time, accurate, and meaningful dialogue with the inmate in question. They also have pioneered a pretty unique product that we haven't seen else out there. They hold a few patents on it, and it's called Cellmate, and that is is essentially a cell phone, a smartphone that the inmate can have, and it does two things. What we like about it is that it is behavior driven. So you give the inmate access to their family and some loved ones and some other key resources that they would like to have, and it helps drive behavior. In fact, Lattice has found that correctional inmate behavior has gone a magnitude order higher when they have access to this type of system, and subsequently they're able to control the inmate in a more pleasant and meaningful way through this device. So the synergy between our acquisition is Lattice has a lot of money in engineering and development on an annual basis as to keep up with their core product offering. We're able to integrate that into the Alpine 4 model, where our subsidiary QCA and even Altea already has those engineering resources. However, what's even better is they currently send their hardware out to be manufactured either in China or some other locations outside the United States. We can bring that back to the United States, do it at the same price point that they're currently buying it, overseas. And so now we have a U.S.-made product, which is great. And we can control the engineering process more quickly so we can deploy the product more rapidly when changes come due. So we're excited about Lattice. We think that it'll fit synergistically and really nicely into the Alpine 4 holding.
I would see Alpine 4 as obviously what it is, a technology company, but some of the acquisitions and other spin-offs that you had, they address a huge diversity of different markets. Define the core process or the core synergy technology that binds all these together, that enables you to have these different types of companies.
Well, that's a really good question. We're, from an acquisition strategy, you either fit in a vertical that we currently own and are really then applying other pieces of the puzzle to, or you're in a vertical that we would like to have, and then we apply other pieces of the puzzle to. We acquired a company called Horizon Well Testing last January.
I saw that.
2010. Yeah, and it's completely divergent from our current technology play in, say, electronics manufacturing or car software related and hardware related products. But we looked at it. I mean, I have a pretty good understanding of the industry, and there's large, EBITDA profits to be obtained in that industry, so we liked it a lot. But there's a commonality problem in that industry, and it has to do with asset management. And so, last year, 2016, Horizon lost about $400,000 worth of, not lost, but was either misplaced or stolen off their job sites of what we call ancillary and heavy equipment. And so we were able to, take down our current asset tracking hardware to about the size of a $50 and be able to apply that to the assets of Horizon. We now have, very good oversight of where that those hard assets are. That whole technology play that we accomplished with one of our subsidiaries is a whole other industry, and not industry, but business onto itself. And we feel pretty comfortable that that we'll be able to not only sell that product down the road to other oil field services and asset-related, heavy asset-related companies that need to track it in the field. And so that was one of the reasons we decided to take on, that get into that industry. We saw some synergies with our own GPS tracking, and it was a subsidiary that produced pretty well even down through the oil recession.
Andrew,
and we liked.
I don't mean to interrupt you, but we got to go to a break right now. Can we pick this up on the other side of a couple of minutes of break?
Absolutely.
Thanks. All right, Kent Wilson, CEO, Alpine 4 Technologies, Andrew Kernan, Michael Yorba, Mervyn Price, CEO Money. We'll be right back.